Welcome back to Wicks and Candlesticks. I got something for you today. Today I am going to break down some rules that I wish someone would have told me when I first started trading. Before you learn any strategy, before you learn any indicators, before you try to make any money on a market, you need to understand something. Trading is a game, and it's not a fair game, and nobody really explained the rules before they let you play. Most new traders, they jump straight into the indicators, straight into entry signals, Discord alert, YouTube strategies, but nobody never tells you how the market actually works. Now, for me myself, the strategy that it's really not a strategy. It's how the market moves. I trade auction market theory. I add a volume profile and I read the footprints. That's what I trade. That is a strategy. And no one taught me the rules, so I had to learn by bumping my head. So I've looked for different YouTube videos out there. There are some out there that give you some detail, some that do not give you a whole lot of detail. And so I'm going to give you some detail that I feel like that's very beneficial to you, and what I feel like that was very could have been beneficial to me if I would have seen this, and I probably would have watched this video at least 100 times. So when you don't understand the rules, you will break them. And when you break them, you will lose. Today, I'm not talking about the strategy. I'm not talking about how to enter or exit trades. We're talking about structure. We're going to talk about survival. We're going to talk about the rules. Because I want you to master these 10 rules. And if you master these 10 rules, you will separate yourself from a whole lot of other traders. Let's begin. So, rule number one, you are retail. You do not move the market. You are not creating the price because the big markets are the big JP Morgan, Goldman Sachs, BlackRock, Citadel, Morgan Stanley. The big banks is what runs the market. They move billions of dollars every day. Billions. Institutions move billions of dollars. Man, I just had to pause, thinking about like, wow, that's a lot of money. They accumulate, they create liquidity, which is you. You have a chart in a brokerage account. That's all you have. But here's where beginners go wrong. Let's say if they see resistance, they would say it should not go higher. But what wound up happening is that they shorted and price pushes 20 points against them. They think there's no way it's going to keep going. No way. But what sometimes you do not realize, an institution is building a position and they needed your stop loss. They need retail traders to automatically enter emotionally. You don't move price, you follow price. Once you accept that you are a retail trader, you will stop trying to predict and you will start trying to align yourself with the bigger players. Once you start learning how to align yourself with the bigger players, you will start seeing consistency. Now, rule number two, big money has big information. You have a chart, they have the data. What I wish that I knew when I first started trading is that institutions is what really move the market. What institutions have, they have research teams. They have a quant team. They have order flow tools. They have the algorithms. They have news access. They have a risk department. And guess what? As a retail trader, we don't have none of that. Not yet. So once you make up in your mind that you're going to stop trying to predict, stop trying to outsmart the banks, you will start seeing consistency. Let me give you an example. Let's say if news drop, right? And you react. Let's say you got into a buy, right? Because I've seen people do it. I'm not gonna lie, I've done it. News will come in, I hit a buy real quick, not understanding that I'm just a liquidity chasing the move. But let's say you buy, and the institutions they position themselves before the news even hit. By the time you enter, you are the liquidity. Let's say for instance, a huge breakout candle come and you chase that. You say, "Oh man, price is moving up. I'm about to get in." And what smart money was doing, they already entered already. You're late. What I've learned, what retail traders do, they like to predict. What professionals do? They confirm. You you become consistent by observing the behavior, not by being aggressive, not by chasing entries, saying, "Oh, I got to make this money. I have to make this money." That's a big mistake that retail traders make. Rule number 3, you have to understand the higher time frame is your friend. The lower time frame is your entry. The higher time frame is what will give you direction. The lower time frame is what gives you an entry. This understanding this right here, this rule right here alone can help you become a more consistent trader. So when I first started trading, I didn't know anything about the higher time frames. I didn't know nothing about the monthly time frame, the weekly, the daily, none of that. I literally stayed on the 1 minute time frame. That's it. I traded off the 1 minute time frame. I entered into my trades off the 1 minute time frame because no one told me, or I didn't find a video. I was just straight strategies. And we all know what's the first strategy everybody start using when they start trading. We already know. I just started using it and I just kept losing and losing and losing, not understanding that I needed to be on a higher time frame to even get a bias. So let's say for instance, if you're on a 4 hour chart and your 4 hour chart is bullish, meaning price is going high, it's creating higher highs and higher lows, but you're staring at the 1 minute and you see one bearish candle, so you short it and it dropped like 8 points, and then the reverse is really hard. You want to know why? Because you traded the noise and it went against you. The higher time frame is just the ocean. The lower time frame are the waves. If the tide is rising, the waves may dip, but the tide win. You always ask, what is the 4 hour doing? What is the 1 hour doing? Where are we in structure? You always get direction first, entry second. Use your higher time frames, because if you do not use your higher time frames, you will not pass go. You will not collect your $200. You would go straight, you would just lose. Period, point blank. You would not collect. So that's one of the biggest things that I had to learn, is to learn how to trade on a higher time frame and enter on the lower time frames. So once you begin to understand the direction, you also want to also look at the story that the higher time frame is telling you through the candles, because the candles is what's going to tell you the story. Read the price action, not just the color. Okay? Candles are not just colors. They are there to communicate with you. What a long wick is. No one told me, like, okay, if I see a long wick, like, what is it? You know, that means rejection. That means sellers tried, buyers absorbed it. A big body candle, that's called conviction. That's aggression. Tiny candles, that means indecision. An engulfing candle, that means takeover. Let me give you a scenario. Price drops hard, a long lower wick, and it closes strong. That's buyers saying, not today. If you only see a red, if you only see red and green, you've missed the psychology. Read the story. Learn what the different candlesticks mean. I'm not saying trade candlesticks because you will get caught up into that. When you're looking at these candlesticks, you want to look at the price action with it. You want to look at where it wicked at. You want to look at where it opened, where it closed. Learn how to read the candlesticks so the candlesticks can tell your story. And once you begin to understand the story, you will begin to understanding the rules. And once you understand the rules, now you can play the game by the rules. Okay? And now that you're learning to play the game by the rules, the most one of the other most important things that you have to master your risk. You have to understand risk first, profit second. Know your exit before you enter. Because if you do not know these things, guess what? You will be straight gambling. You will not know. You will be gambling. So before entering any trade, ask yourself, where's my stop loss? How much am I going to risk for this trade? Is this trade mathematically sound? Most beginners, man, like myself, always thinking, how much can I make? You know, professionals, what I learned professionals do, they think about how much can I lose. So let's say, for example, you risk 10 points, okay, just to make 40. It's a good trade. You risk 40 points just to make 15. That's bad structure. You don't want to do that. You don't want to risk 40 points just to make 15. Now, imagine just risking 20% of your account on one trade, one loss. You're emotional, you revenge trades, you spiral. Risk management protects your capital and your psychology. You have to make sure that you understanding what your risk. You get how much you're going to risk. Okay, if you say I'm just going to risk X amount of dollars, so if I'm going to risk $300 for this one trade, do not do rule number six because I am so guilty of doing rule number six. It is not funny. Never, ever, ever, ever move your stop loss. Let your stop loss get hit. Reset. Reassess. That's what you have to do because this one right here is what I've learned and I've heard people, it has destroyed more accounts than anything. So if let's say for instance for easy numbers, let's say you're taking a short at 15,000 and your stop loss is at 15,020. Let's say price start going against you and price hit 15,000, let's say 18. What happened? You panic. And what happened? You move your stop loss to 15,040 and then you move it again and then you move it again. Or price is just going to tank really quick and wick you out and go in the direction that you wanted to go in. So you never, ever, ever move your stop loss. So now, instead of you losing what 20 points, now you're out of 80 points. That's ego. That's fear. That's a lack of discipline. If price hits your stop loss, it doesn't always mean that your idea was wrong. You had to make sure, number one, before you got into it, you was at your key level, and number two, that you was looking at the higher time frame. So you have to know that it does not mean failure if your stop loss get hit. I don't know how many times that if I'm risking 30 points, I leave it there. I used to move it 30, 60, 100 points, and bam, I blow an account. So never ever move your stop loss. If your stop loss get hit, it does not mean that you failed. That's information. Let it get hit. Reset. 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 And once you learn the rule to your strategy, now you can play your strategy by the rules. And that will lead into you having one A plus trade for the day. It's all about quality over quantity. You don't need 10 trades. You just need sometimes just you just need one clean setup. If you catch a 30-point move in the morning, you're up. You feel good. Instead of stopping, you take five more. By lunch, you didn't give it all back. And that's not a lack of skill. That's a lack of discipline. Trading is execution, not entertainment. Quality beats quantity. Learn the times of the day when it's good to trade, when you should be trading. Learn the different times because there are different set times when we should trade. It's like the lunch hour. You should not be trading during the lunch hour because that's when the market is reaccumulating. We all know that 9:30 is the open. That's where a lot of volume come in. Do your research. Take one A plus trade a day. Do not take 15 and 16 and 17 trades. The only people that really do that are scalpers. If you're not a scalper, don't do it because you will continue. You will fall into a what do you call that? A rabbit hole of trying to get that money back, trying to get it 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 back. You'll be chasing. You don't want to do that. And especially if you're using your own money. Which brings me to rule number 8. Man, I wish someone would have told me about this before I lost X amount of dollars. Use a prop firm. Use a prop firm. Protect your own personal capital. A prop firm forces risk discipline, drawdown awareness, and structure. It trains you. If you can pass evaluations consistently, you've proven something. If you can't follow the rules with funded capital, you won't follow them with your own. Period, point blank. When I tell you trading with a prop firm, you're using their own money. When I tell you I have learned risk discipline, I have learned drawdown awareness, I have learned structure, I have learned not to chase because what happens is if you go against the rules of the prop firm, guess what happens? You will lose. So learn the rules to a prop firm so that you can play the game. You can play the rules of the game with the prop firm. Period, point blank. When you first starting out, don't use your own capital. You can get prop firm accounts for 80 bucks for a 25K account. You're using $25,000 of their money for 80 grand. Now they do have rules. You have to look at their rules, read their rules, learn their rules so that you can play their game by the rules. And so when you start playing the game by the rules, you'll always find another opportunity. There's always opportunities out here. The opportunities will come if you stay focused, if you stay patient, if you miss a move, if it run 80 points without you. I know you feel like, oh man, I hate that. And what happened is you jump in on that 80-point move because you don't know the rules. You do not chase breakouts. If you're not a breakout trader, do not chase it. One of the rules to this game is that you buy low, sell high. If price had already jumped 80 points, guess what's possibly what can happen next? You jump in late, that's called FOMO, and then what happened? It pulled back. It get close to your stop loss. Then you move your stop loss down. Then you move it some more. Then now, by now, you're down 1,000 points. You're down $1,000, or you just blew your account. So now you're frustrated. Now it's playing with your psychology. Been there, done that. That's why you let your stop loss get hit, number one, and you will always have another opportunity. You always, other opportunities will happen. Wait till another setup come. Guess what? Let me tell you something. The market will be open the next day, except on Friday, except for on Saturday. It reopens Sunday at 6 p.m., which brings me to something else I want to bring up is that understand the sessions. Okay. When I first got into trading, I looked at it as a trading day. We're trading sessions. It's not the day because every session starts at 6 p.m. They start at 6 p.m. and it rolls into the next trading day slash session. That's one whole entire session. So, number 10, it's the last one. Discipline over strategy. Consistency wins over the long run. Let's say you and another trader is using the same system. You lose, he win. Why? You want to know why? Because he probably followed the rule and you didn't. You move your stop loss. You oversized. You chased. The difference is not intelligence, it's discipline. Winning traders, they log their trades, meaning you're journaling when I got in, what time I got in, what future you got in. Was it gold? Was it MNQ? Was it NQ? Was it ES? Was it YM? You journal this stuff. You review, you look at your mistakes that you made. You follow your structure. You protect the capital. Consistency beats brilliance. I'm trying to tell you every single time. Now, if you just master these 10 rules, you stop gambling. You will operate with structure. The market would stop feeling so random. It will all start making sense. Learn the rules of the game. Play the game by the rules. And then, and only then, you would not worry about strategies. Once you learn the rules, how the market goes, how the session goes, how candlesticks are, anything that you're looking at when it comes to trading, find out the rules. Find out the rules. If you're using an indicator, find out the rules to that indicator. Heck, in life, period, find out the rules so that you can play the game by the rules. Follow these 10 rules. It will help you to become a consistent trader. I follow these rules daily. Because I follow these rules, it has helped me to become a consistent trader.